Hello everyone, and welcome to today's webinar on real-time digital banking fraud detection. Let's wait another 20 seconds. People are still joining the webinar. Okay, let's get started. So hello everyone again, and welcome to today's webinar on real-time digital banking fraud detection. Let me introduce the two speakers. Wendy Zui, Senior Product Management at Guardian Analytics, and myself, Eric Tran-Lee, Vice President of Product Management. I will start to tell you what we are about and then walk you through our own observation on our own customer base and fraud intelligence. Guardian Analytics is the #1 behavioral analytics financial crime investigation platform. We are specialized in real-time behavioral machine learning that basically perform a user 360 on all the account holder and from our financial institutions to look into their activities, understand exactly what they do, establish a baseline, and detect any deviation. From this technique and methods, we perform real-time fraud detection as well as anti-money laundering using techniques like multi-channel link analysis to detect hidden relationship between data, user, transaction, and organization. The outcome of those two methods, real-time fraud detection and anti-money laundering with link analysis, allowed us to enable an open BI platform where you can perform fraud analytics and anti-money laundering analytics on alert cases and your own customer base. At a glance, we have over 450 financial institutions that is part of our customer base and also feeding our intelligence network in terms of fraud. We have over 40 million commercial and retail account holders and about 5 billion in terms of volume of banking activities. So from that install base, if you wish, and level of activities, we're able to have a very good insight into why detecting fraud in the context of digital banking truly matters when it comes to real time. The situation in digital banking is a little bit different in terms of fraud than, I would say, wire, ACH, or let's say more batch transaction, because it's not only about detecting quick and fast enough to stop the fraudster. There's a dilemma that we need to address, which is the security level. There's a friction between the online and mobile user experience, which compose mainly the digital banking business, and the fact that we have to ensure security. And that dilemma between a frictionless or a friction-right user experience and the level of security layers you have to introduce make it a very challenging problem to address with traditional technologies. Our observation from, again, our plus 450 financial institutions and 40 million users as well as 5 billion volume activity is right now, because of the Equifax breach, we believe, there is an increase in account takeover. And as you all know, in the dark market, for less than $25, you could have not only have the user credentials, but anything that is related and associated with that user. And we do see now a lot of account takeover using either simple, stolen identity or synthetic one that are totally fabricated at a very quick pace. And that caused the digital banking platform to be very vulnerable because it's the top method of compromise and it's probably the hardest one to detect. Another observation is that mobile users, which compose about 70% of the digital banking user base, and mostly young people, millennial style, are less inclined to protect credentials in order to gain faster access. In other words, it's very similar to shopping cart abandonment rate. In other words, the more you raise the level of security, the less shopping carts going to be performed, which would going to impact the revenue ultimately. So as such, what we'll do right now is Wendy is going to introduce to you why we're unique and then walk you through some digital banking fraud cases that we do know and how our product is enabling you to protect and prevent all those fraud cases. Wendy?
Thank you, Eric. So what is unique about Guardian Analytics? So Guardian Analytics, we provide friction-right fraud detection by providing the optimal friction at the right time for the right user and detecting account takeover fraud as early on. So the optimal direct friction element is that should be zero friction for zero risk. And then the friction should only increase if the risk rises for the right user. And here, as you see on the x-axis, we'll measure, the latency in detecting the sign of account takeover fraud. And then on the y-axis, we measure the friction level from low to high. When the friction level is too high, then the cumbersome experience for online and mobile banking would cause a user to abandon these digital products. And then when the latency to detect ATO fraud is too high, then we're catching the fraud too late. The fraudulent transactions may have already occurred. So Guardian Analytics behavioral-based machine learning sits right in the center of the quadrant compared to transaction pattern-based machine learning or traditional rule-based engine, where the broad stroke of rules may affect too many users, increasing the friction level for them unnecessarily, where transaction-based modeling then rely on the transaction to actually have to take place, and therefore it's too late catching the ATO fraud because the money has left the account. And because Guardian Analytics is behavioral-based, we were able to kind of pinpoint which user based on only that user's behavior and then raise the right friction level. So how do we actually enable friction-right digital banking experience? Many of the traditional fraud detection solutions would require known fraud schemes to train the model or require very frequent updates on the fraud schemes as they change. Guardian Analytics fraud detection don't really require that. And we risk score all user activity that we receive from the digital banking platform. We can detect fraud signals early on with non-transactional activities. And then like many counterparts on the market, we provide multi-channel protection for both online and the mobile. And most importantly, we enable risk-based authentication authorization in real time by sending the risk score based on these user activities, but only for the right user and the right, at the right step for the digital banking platform to challenge the user. And this is all right on our behavioral-based machine learning technology. We enable the friction to be also risk-based and individualized so that it's just the right amount of friction can be increased for the user that we identify having suspicious behavior without jeopardizing the overall experience of other users. So here is an illustration on kind of the information flow between user, digital banking platform, Guardian Analytics solution, and the fraud team. So digital banking users these days often access digital banking platforms on multiple channels through multiple devices. When user performs certain actions on digital banking platforms, such as viewing the account, making a transfer, looking at their deposits, these user activity or actions get sent to Guardian Analytics fraud detection solution. We evaluate them at real time and give a risk score to all these user activities and then we send the real-time risk score back to the digital banking platform, enabling them to do risk-based authentication and authorization to challenge the digital banking user if that's necessary. At the same time, we also output fraud alerts to the fraud analysts who use our application to review and investigate these suspicious user activities. So this is how we connect the digital banking user, the fraud analyst, to provide the friction right, risk-based challenges for digital banking platform, but also give the ability for the fraud team to do in-depth analysis. So in the next section, let me walk you through a couple of examples of account takeover fraud, understanding how the process takes place and how we are able to detect account takeover fraud. So first, how does the fraudster steals identity? Here, we're going to show you a real-life example of identity theft using phishing attack technique. It starts with a user receiving an email appearing to be very legitimate, here as an example from a PayPal, that asks them to navigate to an account verification page. The fraudster has smartly used very convincing use of PayPal's logo, font, color scheme, even the footers, and they have a big call-out action for the user to click on to log in. And if the user is tricked to click on the login link, then the user is navigated to a destination website that the fraudster sets up to collect users' personal and financial information. So that's where the user may fall to the victim of identity theft. So once the fraudster successfully collects the user's information, this is where they will start breaking into the user's banking account and take over the account eventually. Here, what you see is kind of a timeline of an example of what fraudster may do to perform the account takeover fraud. So once they obtain the credentials or information, they will make multiple attempts to log in to the banking account, potentially using the wrong password. And after a number of failures, the fraudster may force a password reset. And if that's successful, they could go into the account and then change the MFA, multi-factor authentication challenge device or the destination. So later they can circumvent the risk-based authentication because they would direct all these challenges to their own device and then where they would be able to bypass it. And the fraudster may take some other time later on to even jump from the online banking channel over to the mobile banking channel. They could download the mobile app, log in successfully, and like I said, they may be able to circumvent the risk-based authentication and MFA challenges. Then they could start, taking the account apart, transferring money out. And because mobile deposit check has been seen as a fastly growing type of fraud or exploit the fraudster use these days on mobile banking channel, what they could do is they start using the RDC feature on mobile apps to deposit fraudulent checks to kind of increase the available fund that they may be able to draw out of the user's account. And then they may make multiple transfers, take the money out of the account to their own destination. So this timeline shows that the account takeover activity can span across multiple days. And detecting the early signs of account takeover will prevent the money leaving the account. And exactly because it can span across multiple days, there's multiple opportunities to kind of stop the fraud and stop the fraudster. So the analyst should review and investigate the suspicious activity as the additional line of defense to risk-based authentication. So how does fraud analysts be able to use Guardian Analytics solution to analyze? What you see here on the screen is an example of a fraud case from our own customer base, where the Guardian Analytics solution was able to detect the early sign of account takeover activities and warn the fraud analyst. And some of these key drivers that we demonstrate here are combinations of suspicious activities and the risk factors that we raise to the fraud analysts to help them investigate. And those are kind of the reason we amplify the risk level of the user session. So for example, some of the activity we observed that could signal account takeover may include a number of login failure that's detected, a new MFA device registration has occurred, and also the user added or changing the user profile. And in addition to that, there's a number of key risk factors that would drive up the risk level, which includes a new login location, operating system and browser changes, the speed of the location change makes it very unusual, and then also the non-standard IP tabs compared to what user has consistently been using. So specifically in this example, where we protected both, we're monitoring both online and the mobile activities. As you can see, the user has consistently using the mobile channel and occasionally, log in from online. But when they access the mobile channel, they consistently using mobile web. And then when you all of a sudden start to see the user is using or switching over to an iPhone device and on a mobile app, that could raise a suspicion. And then combined with the other signals, such as this is the first time international login from UK instead of US, and non-standard IP, a downgrade of operating system version and browser version compared to what the user typically do. These should be the signal where the analyst can take and do further investigation to confirm whether this is actually the user's normal behavior. And the probability of this being done by a fraudster is amplified because everything is happening at the same time. So what happens with fraud analysts when there's enough signal for them to do further investigation is they can use Guardian Analytics solution to create cases and manage case to a workflow and document their investigation steps. And here's an example how a case can be created. Open case looks like in our application. We track the whole process of case creation, addition, and closure, and then the analyst can also add case notes to document the steps they take to verify whether the user activity is legitimate or fraudulent. We pre-populate certain key information to reduce the amount of manual work for the analyst. Some of the case category, priority, etc., were automatically captured as part of the case notes. And as the investigation takes place, analysts can track the results of their investigation, such as they have made a customer call, they have verified the bank customer actually did not log in, etc., and what are the key signals that they detected or decided to investigate. So what we have walked you guys through is features and tools in Guardian Analytics solution that helps the fraud team on day-to-day operation. But how does the managers and executives gain big picture and understand the overall fraud exposure of your organization? This is where Guardian Analytics Fraud Cockpit, which is our BI application, helps the managers and executives to look at the big picture. We provide out-of-the-box dashboard and reports that can showcase how many frauds been prevented, what is the dollar amount for all of your digital banking channels and products. We can showcase what is the performance of the fraud team by looking at how many cases they created, closed, how many fraud alerts they have reviewed. And then you can also see the overall alert volume during a period of time. And the type of cases being created against, whether this is categorized as account takeover fraud or check deposit fraud, etc. So just to recap, Guardian Analytics solution is able to enable friction-light digital banking experience because of our uniqueness in using behavioral analytics. We don't rely on known fraud schemes to train the model. We don't need to have frequent updates of rules or fraud schemes. We can risk score all user activity received from digital banking platform, and we're able to detect the account takeover signals early on before the transaction takes place. And then most importantly, we enable the digital banking platform to do risk-based authentication and step-up challenges in real time to increase the right amount of friction for the right user at the right step. So if you want to learn more about our solutions, we have a webinar channel on Black Talk that you can subscribe to. Previously, we had just went through a webinar for detecting ACH fraud. And then there's upcoming webinar in a couple of weeks. We really welcome you to continue to attend. In addition to the webinar channel, we also have a video channel on YouTube where we can showcase our products and provide educational series addressing a variety of topics. And with that, I'll hand over back to you, Eric.
Thank you, Wendy. So this open up the Q&A session. We have a couple of questions from the audience. The first one is, what are some of the common patterns for ATO, account takeover, you have seen in your customer base? You want to take that one, Wendy?
Sure. So many of the account takeover frauds we observe across customer base involve all or a subset of elements, including a number of failed login attempts with MFA challenge failure or success, adding or changing user MFA destinations, then followed by a successful login and some money transfer activities. This behavior often accompanied with unusual IP location, OS and browser changes, time of the day, and other deviation from legitimate users' behavior.
Yeah, I think I would add also, actually, account takeover is just a start. Our common observation is there's a long-lasting impact. It's basically an early warning sign that further breach is going to happen. And therefore, once account takeover takes place, you really have to go and step up the monitoring of all kind of transaction happening on the account because fraud happens afterwards, after multi-days over multi-channel. Okay, we have another question. IP location may change often. If I have to review each login and call the customer to confirm his location, is it a lot of work? But if I don't, I may miss something. What's your recommended best practice? Wendy?
I can take this one. So Guardian Analytics assess all session activities and the characteristics before giving a risk score. We recommend focusing on the sessions with a high risk score and review the IP location change in the context of other risk indicators in the session. IP location changes could be common for some users who travel often or log in frequently while moving from, say, home to office to coffee shop, where we will detect the frequent IP changes, but we'll learn that this is normal for this user and therefore do not amplify the risk when there's a new location observed. But on the other hand, for users who do not travel often, when there is a location change and combined with a high velocity of the change, new OS browsers and other suspicious activities such as failed login, a new bill pay or wire or P2P recipient being added, it becomes clear that this is not normal. And then we would recommend the analyst to open the case and investigate.
Okay, thank you, Wendy. There's a third question. If there is no transaction activity in a logging session, should I still spend time to review it?
So for digital banking fraud, especially account takeover fraud, it can happen across multiple days and multiple sessions as we kind of walk you guys through. So the initial fraudster activities are often non-transactional. Guardian Analytics risk score all session activities, and we detect anomalies without relying on user spending patterns. So reviewing the session that are scored as high risk and shows early sign of suspicious activity will help catch the fraudster even before a transaction is attempted.
Okay. So I have another question. Can Guardian Analytics fraud analysts take actions on behalf of a client bank, financial institution, to stop a suspicious in-flight transfer or logging session? Or is that still up to the FI to address? So, you want to take that one, or you want me to answer, Wendy?
So we have a fraud desk services where we do perform alert review on behalf of the financial institutions, and basically they contract that services for us, and our fraud expert would review the fraud alert using our application and create cases, but hand over the cases to the financial institutions fraud team for further investigation and decision.
I think that question was more related to the real time, so let me answer this one. We have actually API that allows to do a detect and respond in real time. So all the risk scored activity on all the sessions coming in real time, we actually score them as they come. And the API will output the risk score to any other system that could either hold it, reject it, or let it through. This is the way we allow the full automation of all the online and mobile session in real time. Having said that, what Wendy has just said is, there's two parts in when you do fraud detection. Is one is that the alert, if you wish, analysis and triage, and then the other one is the case investigation itself. We have fully automated, because of the risk-based approach we have, the whole first part, which is the alert triaging is fully automatic and risk score, which saves a lot of time to fraud analysts. As it comes to case investigation, which mostly is high order alerts, if you wish, mostly red and yellows on our end, we can have two options. One of which is, of course, the fraud analyst team of the financial institution, and or our fraud desk team, which is composed of fraud experts that would do two things: review the high order case and do cross-population. So basically, since we have 450 banks and multiple profiles, we're able to spot if that IP or that user activity is fraudulent, or it has been already detected somewhere else. So these are the two combination of options we have in terms of enabling and preventing the in-flight transfer or in-flight fraudulent activity. Okay, I think I don't have more questions. So with that, we're going to wrap up the webinar. And thank you for attending. This webinar is recorded. You will receive a URL link notification. And please rate and suggest content to improve this webinar series on digital banking. Thank you very much.